If you're thinking about buying a house, the first step should be to get a pre-approval. A pre-approval is a statement, official statement from a bank saying that you are qualified to purchase a home. Now, this is important because when you do find the house that you want to buy, you want to be able to show this pre-approval to the seller so they have confidence in your offer and that you can actually purchase the home. So what do you need to get a pre-approval from a bank? Well, that's what we're going to talk about in this video. Hi, this is Joe Eslait with Casa Real Estate, and let's start with the first thing that you need to provide the bank, which is proof of income. So how do you do that? Well, the bank is going to want to see your tax returns and your W-2 statements for the last 2 years. They're also going to want to see your pay stubs for the last month, and then any other income source that you have, they're going to want to see proof of that income. The bank is also going to want to see proof of assets. So they're going to want to see your bank statements and any investment account statements that you can provide to them showing that you have other assets. It is very helpful to gather all these documents ahead of time so that when you meet with the lender in person, you can provide them and that way make the pre-approval process as smooth as possible. You can also go online and securely file a application for a pre-approval, and you can also submit all your documents securely online through the lender's website. The lender is also going to want to make sure that you have good credit, so they're going to check your credit and they're going to need your social security number to do that. Most lenders will require at least a 620 credit score to give you a pre-approval or for you to qualify for a pre-approval. But the higher that your credit score is, the better that your interest rate and your home insurance is going to be. So trying to get the best score prior to getting pre-approved is probably a smart choice. Now, if you're looking to get the best interest rate and the best terms from a lender, the lender is going to want to see a 760 credit score or somewhere in that neighborhood. So again, the higher that your credit score can be, the better for you in the long run. Once you meet with the lender is going to verify your employment and your income. If you're self-employed, the lender is going to ask for more documents to verify your income over the last several years to make sure that there's some consistency and stability with your income. These are the majority of documents and things that you will need, but some lenders may ask for more documents depending on your situation. Another question that I get a lot from clients is, how long does this pre-approval last? Typically, this pre-approval is going to last anywhere between 30, 60 to 90 days. However, all it means is that if their pre-approval expires, you just have to have the lender collect some of these more updated documents like your pay stubs. If it's been a while, they might have to check your credit again. But as long as nothing major in your finances change, you should still be able to have a pre-approval. You would just want to make sure that you get it updated with the lender before writing up an offer on a property. If you're looking for down payment assistance options, make sure you check my next video, and I will see you on the next video.